Remember the catchphrase, low for longer? Well, that's not going to be quite true for the US anymore. The Fed, after talking for so long, finally did one interest rate hike in December last year. If you remember, 1 year ago, they were actually talking about 4 rate hikes. So that really brings me to the big question. Now they are saying instead of 2 rate hikes this year, there's going to be 3 rate hikes this year. We do think that as long as the Fed does even 1, 2, maybe they'll get to 3, I'm not sure, rate hikes this year, then the dollar is going to strengthen.
This is basically the latest plot on the FOMC dot plot, right? The chart basically indicates of basically the FOMC members' expectations of the interest rates, the Fed interest rates going forward. And you can see the median, right? The median forecast, all right, in this dot plot is probably hovering at 1.4. So to give you a certain context, just before the December FOMC meeting, all right, the median forecast was holding around 1.1. What it means, all right, is basically setting up a base case for a 3 interest rate hike in 2017, all right, as opposed to the previous of 2 interest rate hikes in 2017. If you look at the significant timeline, which is drawn in red, which is the November 8 US presidential election, all right, you suddenly see a sudden spike, all right, in both of the curve. What it means, with the election of Donald Trump, right, the market start to believe that the U.S. government or U.S. economy going forward, right, will undergo a series of fiscal reforms or fiscal policy stimulus, all right, that will probably come to promote the growth of the U.S. economy. That brings off a very good base case for a dollar appreciation. And as you can see, the dollar, ever since on that eventful day, dollar has been on the positive trajectory. Has been picking up against most of the major currencies against the trading partners.
The bond segment that we're most positive about is really emerging market high-yield bonds. But it's not just the spread compression that's going to give you the upside in EM high yield. I think you could also benefit from the high coupon. And that high coupon provides you a buffer to Fed rate hikes going forward.
The first one that we can use to build our portfolio is the Fullerton US Dollar Income Fund. This fund basically has a focus into the Asian credits, right? What it seeks to do is to invest at least 70%, all right, of the fund into investment grade, and basically it has a mandate, or it has an investment mandate of up to 30% to invest into high yield bonds, right, to give you a lift in the yield, right, to overall have a diversified portfolio that gives investors a steady income.